Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello. Good morning, everyone. Hope you had a great weekend. Hello, Mesa. Hello, Comedy. Okay, guys. So today, we're going to start with the charts. Just to change things up, we start with the charts and then we move to the economic calendar. Last week's economic calendar, obviously, or next week's economic calendar, sorry. We start with the charts, and as always, we start with the DXY. The reason I'm doing that is because I want you guys to have an overall expectation on where the market might go, and then we connect it with the fundamentals. I'm going to try this for a couple more times, and you guys tell me if you prefer this more. We start with the charts, or you prefer also if we start with the economic calendar. Okay. Gold chart. Yes, we will move to gold chart. Let's start with the basics first. Mesa, we start with the DXY. Okay, so what happened here? The weekly chart on the DXY shows an engulfing candle, actually a proper one, a bullish engulfing candle here. That's a very important sign, or we can call it an early sign, because after this rejection we saw a few weeks back, now we closed last week with a strong engulfing candle. Following Friday's PCE numbers, which were the as I explained last week, those are like a different or another inflation measure used by the Fed to make decisions according to. So the PCE numbers came in high, meaning that interest rates will stay higher for longer, or at least that's what the markets understood, that interest rates will stay higher for longer to fight this inflation, this sticky inflation, as per the PCE reading. So that's why we saw a strong close on the DXY at the end of last week. All right. Hello, Nadim. I hope I'm saying your name right. Okay, so that's for the weekly chart. Let's move now to the daily chart. Okay. Now, on the daily, we're still, we can't see any signs of real strength yet. This could be just a correction, and then we can continue going down, because it hasn't properly broken the trend line. No valid penetration yet. So once we break above this level, which is 99.6 or 99.5, that's a different story. We can start thinking that the DXY might have reversed now. Okay, so that's for the daily chart. We move to the 4 hours chart real quick. I'm going to keep this one very light, because nothing much changed since last week, except for gold, silver, and maybe the indices. Okay, so yeah, still negative on lower time frames. It doesn't look very bullish. We only have, I just want you to keep an eye on this level, which is 99.5. And that's correct. Great. Gold going up. Yeah, most probably. I was just saying, in my opinion, is while switching from trading to listening, technical straight feel like alignment. Great. It's good. Looking for a fake out on 5,100. Okay, let's see. So that's for the 4 hours. Nothing impressive here, to be honest. Nothing changed. Let's see how this looks. Okay, so the Euro USD is the exact opposite. So we have a bearish engulfing here. As long as we're below this bearish engulfing, like top, which is 1.1880, which is like less than 60 pips away from here, we're still good. We might see a reversal actually from here, but similar to, or like the exact opposite of what we saw on DXY, we're going to see that it's still um, in an uptrend on lower time frames, like the daily or the 4 hours. The daily like looks, if it closed somewhere around here, then yeah, but it closed somehow a little bit above this or those two major trend, not trend lines, moving averages. So that's why uh, we might we might be looking at a continuation instead of a reversal. But the equivalent of 99.5 on DXY is basically the 1.1570 on Euro USD, 1.1580. So so far it's still like higher highs, higher lows, nothing like, or no signs of weakness on lower time frames. But the close on the weekly might be like an early sign that euro might be reversing down and the dollar might be reversing up. So that's for the euro. I think that's it. Nothing much changed. Yeah. So we got this. 1 second. We go to the weekly. Yep. Okay. So on the weekly, we also have this engulfing. We had two engulfing candles actually. We had this rejection from this area all the way here. Then we had this engulfing candle, and then we had this engulfing candle, which is the bigger one last week. Okay, so it shows that it might be reversing down, especially with like given the XY chart. But in my opinion, this is gone. Let me delete it. This is still on. So this might be still on because, like, I mean, the uptrend or the upward movement, because yeah, like you see this like blue line and black line. Those are the 200-day moving average and the 126-day moving average. Both of them are very important, and it's just like it's sitting on it. It's like it got rejected from the 200-day moving average, and it's like comfortably above it. So so far, although we see like early signs of reversal on the weekly chart, lower time frames are not showing us the same reading, or it's not giving us the same feel. On lower time frames, it looks like we're still going up. So how does it get invalidated? Once we break 1.3333. Okay, that's that's quite a number. Special number, huh? Okay. Any trade on gold? Gold won't give me my dream buy. Pearson Harman. Yeah. You mean 3,800? It might not, yeah, after what it did last week. And good morning, Pearson. So we go to 4 hours. Yeah, 4 hours still. But it's very close to break or like validate the reversal. Like it's very, very close. So let's wait and see. Let us wait and see. Yeah, I think now about time we move to like the Nasdaq. Last week they closed like both, like all of them, all three of them. The major indices closed somehow up for the week. So the Nasdaq closed somehow up, but like I don't feel good about Nasdaq. I don't know. I think it's, I don't know. Like basically the pivot point, or the point from which it might actually reverse to the downside, and start like a strong correction is if it breaks 23,800. That's the pivot point here where I have my alert. Okay, so so far, if you're trading what you see, not what you feel, you should be buying Nasdaq because like last week it closed somehow strong, and now you're retesting basically like half of this engulfing candle that we had um, a few weeks ago, like 2 weeks ago. This one here. So we just need to wait and see. Um, like the market is like, I don't know if you guys get this, but I get a feeling that the market is like in the middle. Like either it breaks upwards or downwards. It's not trending anywhere. Like there are no clear trends in any um, asset class. Like it either reverses from here or it continues going up and like opens up a new impulsive wave to the upside or the downside depending on the trend. But so far I can't see anything like clearly trending. Remember like a month ago maybe how easy the gold chart was. It was like just bullish, bullish, bullish on all time frames, and it was easy to predict what's going to happen next. Now it's somehow different. Gold is bearish just an hour ago. Please zoom. Okay, I will zoom. Nothing much to see in here, Nadeem. On the daily, like still going up. On the 4 hours, it's just like trading sideways. I wouldn't like be trading Nasdaq, to be honest. We check the weekly. That is Dow Jones. Dow Jones is still very bullish. It's the most bullish out of all stock indices. Why? Because people are like now there's a new narrative in the market that the tech companies and the AI names, big tech names and AI names are overvalued, meaning that like their valuations are too stretched. Like okay, for example, Nvidia is worth $4 trillion, but in reality it shouldn't be this much. It should be maybe 2 trillion, which is a big like a big bubble in the AI sector and the tech sector. So this narrative started fueling something we call rotation. Rotation is when people move their money from or rotate their money from big tech names to industrial stocks, to home builder stocks, to energy stocks, and so on. So that's why like the Dow Jones is an industrial average. Okay, so like it includes some industrial names. So that's why we saw like while Dow Jones was making all-time highs, the S&P 500 and Nasdaq 100 were dropping. Why? Because money is moving outside of Nasdaq 100, which is like the biggest 100 tech names, out of those tech names and into the industrials. That's why we saw the Dow Jones making new all-time highs while the other two were dropping. All right. Um, how has been your trading 2026 so far? Not good for me. Almost BE. Well, I'm above BE. I'm doing fine, but it's not the best. Like January was really really good, but like February not so much. Um, like I'm still in the up, I'm still in the green, but it's not as much as I wanted it to be. But I can't complain. Still making money, so all good. All right. 1 second, 1 second. All right. So that's for the Dow Jones. That's the weekly chart. Let's move to daily. Daily is still also like, if you can see, like for the past few days, like 10 days or like less, maybe 7 days. 1, 2, 3, 4, 5, 6, 7 days. Yeah, it's been trading in a tight range, not very tight, but still a range. So it's hard for us to actually pick a direction and just go with it, because anything could happen. It might just like sweep up and then go down, then or sweep down and then go up. So that's not a very like safe um, time to trade. Okay, but like on the 4 hours, actually, it's making quite a good uh, setup. Like it's building up here. Like we can obviously see that on the 200-day moving average, we can see proper rejections and proper setups, like or proper structure. We can like this is engulfing number one, engulfing number two, engulfing number three. We're still in it. Like it still has two more hours to go, but still like it's respecting this low and it's still doing well. It's stabilizing above the moving average, not below. So that's a good sign. I might be interested to buy this actually. Okay, that's how it would look like. We do this. We do this. That's 1 to 5. That's a great trade actually. I would definitely be interested in this one. So Dow Jones buys. Let me place my alert here. So once it reaches there, I buy. It's worth it. That's what I can tell you. It's 1 to 5. Okay, I used to have updates on manufacturing and current products for AI chips, like manufacturing and coding side every day when I was working on robots. And what you're saying was is almost close. I didn't get what you're trying to say, Meza. What do you mean? Nadeem, this happens every 4 to 5 years with indices. The US will attack Iran. Oh, really? You're from Iran? Hopefully not. And the stock market will collapse and they'll buy the dip. This happened with '08, COVID, tariffs, etc. It makes sense, yeah. It makes a lot of sense, Nadeem, yeah, because good luck with your Dow Jones. Thank you, Meza. It's not confirmed yet. I need to see this 4 hour candle close first. Then I see like a correction. Only then I will buy. Like it's still like maybe I will enter this after 4 or 5 hours if my setup is there. If not, I will not. So back to Nadeem. What you're saying is does make sense, a lot of sense actually. But if you have any updates, since you're in Iran and like maybe you have some like better or access to information from Iran, what's happening there, man? Like, just tell us, like, give us your insight as a person living there, or you're not living there, you're just from there. Okay. Excuse me 1 second, guys. All right. So yeah, that's for Dow Jones. Let's move to S&P real quick. Go to weekly. Yeah, it also closed bullish, but I want you to look at something, guys. 1 second. I want you to look at this. Look at what's happening here. You see this? This is not healthy and it does not show strength. Like, do you see this arc? Like, it's losing momentum and it's losing strength and it's losing steam. you think like if you look at it, like look at this one here, for example. Look how like straight up it goes. This one, however, is starting to arc down. So when have you ever seen um, any asset go up after this? I think very rare, if not at all, if you get me. Because like this shows that momentum is slowing, and like at those levels, markets does not like or like investors are not interested to enter the markets at those levels. They're too high, so they're waiting maybe for a discount to this level or this level, or most likely this level, which is 5,400. That would be a good place for investors to buy. But so far, the lack of interest is showing on the chart, as you can see. All right. Do you have any questions on this before we move? And I'm waiting for Nadim to answer my question as an insider from Iran. And by the way, Nadim, I think like I heard yesterday that the supreme leader in Iran is still expecting to have like, or not the supreme leader, I don't know, someone like from the Irani officials is going to meet with the American officials in Geneva next Thursday, so like a few days from today, to discuss the situation. So I think like we still have some room to breathe till like next weekend, and I'm not sure, but hopefully it will not happen, because like the whole region will be on fire now. All right, so that's for the S&P. I'll be waiting. Can you see my message? I cannot. I can't. I can see your message now, but where did you send it? I have a question on S&P 500. Is, in simple words, are buyers looking for bearish moves in the market? No, buyers never look for bearish moves in the market. They're just not as interested. Like we don't have this buying momentum that we usually see in upwarding markets. Okay, buyers never look for bearish moves; they look for bullish moves. Sellers are looking for bearish moves, maybe. So yeah. You already sent it? Where do you mean? Here or like Instagram, or where did you send it? Bro, I can't see your no, I don't have your message. On YouTube chat? Hmm. I can't see it. Yeah, something is wrong. Let me go to YouTube and check. Let me go directly to YouTube. Um, mhm. No, like not even on, like I can't see it. I opened the chat, but no, I can't see it. Anyway, so maybe reach out on like on Instagram. All right, so how about we move now to gold, guys? What do you think? About time, huh? All right, so the momentum is still strong. Last week we had the chance to drop lower, especially after this candle here. It was like, imagine this was all red, and it would have engulfed the previous candle, but it did not. It closed bullish and outside the bands, or outside the upper band even, which is very bullish. So yeah, that's a bullish sign on the weekly. Then we move to the daily and we see that it has broken this level, this very important level, which is 125. Okay. And like since it opened today, it broke Friday's high, which was like a very bullish close. Yeah, a very bullish close. Today it broke that high. So for me, if you're asking me what I think, like I had some thoughts, or I had some like predictions that it might actually go down before making new all-time highs, but this actually changes my mind a little bit. There's still a chance of a bigger correction to the downside, but um, the higher probability is a continuation, but we need to wait and see. So let's look at it this way. We either have like this move, we're done with this move, either we go up here, like somewhere around this area, and then we drop down, or we have this move here, this move here, and then we start going up. Now we have what? We have 1, 2, 3, 3 higher lows, and 1, 2, 3, 3 higher highs. Now that's a confirmed trend. And whenever you see a correction in this movement, you buy. So somewhere around the early 5,000s would be a good buy, targeting new all-time highs if your bias is bullish. Now, from what I see, it should be going up now, but anything could happen. It might like just reach this area, which I had marked out here. Might reach this area and then start correcting down. So what do we know for a fact, or not a fact? Like what's the most probable thing to happen? If we see that it might reach here then drop, then let me draw it for you so that you can understand what I'm trying to talk about. Now, what's the only or the most probable movement that we will have? Either it's going up or down, but there's one move that is going to happen. Either way, if it's going up or it's going down, there is one move that is in common between those two scenarios. What is it? So if we're going up here and then we're moving down, we have this area to utilize. If we're going up from here all the way up, then we have all this area to utilize, which is this, for example. Here, 1 second. I'll draw it for you in a more, 1 second. Sure. I want you to look at this dark area. So if, for example, gold is going to do this, which was one of the scenarios we explained, then go up here, then drop all the way here, okay? Then we have this area, all of this area here, which is this move, to utilize, okay? This is if it's going down, right? And even if it goes here, we don't care. We are sure of this movement. And even if it's going to do this, it's going to drop here and then continue going up, then what's the sure thing that will happen? It's also this area. So I try to utilize this area, which is like almost $350, which is 3,500 pips. I have an area of a confirmed 3,500 pips. I don't know if that makes sense, but that's how my brain works. Gold is acting cheeky. Yes, nice. For my bias today is also short. Watching from the Philippines. Hello, hello. Hello, farming. But did you guys understand what I just explained, or you want me to repeat it? Okay. Sent a DM on Instagram. Okay, thank you. Makes sense. Makes sense. Okay, so everyone actually agrees with this. So yeah, basically what I'm trying to say is that we have this area to utilize. You see this dark rectangle. We have this area to utilize. Either if it's like continue, like if it's going to continue going up from here, or it's going to reach here then drop. We don't care. We get this movement, and then from here we decide what are we going to do. Are we going to continue going up and then follow the trend, or if we see signs of weakness, we might decide to go short and go all the way down with gold. So I hope this was easy to understand. I can look for a bullish and one bearish for you. What do you mean, Mesa? I have a question in both scenarios. How are you going to utilize? Yes, please ask me. So what I was trying to tell you, in either scenario, there is one movement in common, which is the movement from here to the upside, like to cover this area, this dark rectangle. That's what I'm trying to say. Like either scenario, if it's going up or down, gold has to go up here, right? Before dropping or before continuing its uptrend. So we have this, let's say, most probable area of trading. So that's why I was trying to tell you that if I see it here, I'm going to buy, because like this area is going to get covered either way. If we're going up, it's going to get covered. If we're going down, it's going to get covered. Hello, good morning to you too. Okay, so that's pretty much it on gold. I think we covered almost everything. Now, you know what I'm going to do? I think now it's time for the economic calendar. Guys, do you have any more questions before I move to the economic calendar? Okay. Do you have any questions? Yeah, time for fundamentals. How about you guys? Do you have any questions? Go to here. And then, hello guys, feel alive. Do you have any questions before we move to the economic calendar? No? Okay. Okay, so this week it's very light. Let me share the screen. All good? All right. So let me now share the calendar. Okay. So can you see clearly, yeah? Hello, hello? Can you read my message now? Sure. 1 second. I'm sorry for calculating my question. Yeah, sure, Mesa, go ahead. And Nadim, I'm going to read your question now. Okay. Let me read your message. They are going to see big correction in gold. You mean correction to the downside, Nadim? Okay, so basically, Nadim is saying he believes they will attack, and a regime change will happen in Iran soon. So you mean the correction will happen not because of the actually the attack? It will happen because of the regime change, correct? Yeah, yeah, I got you, Hassan. Yes. Who? Oh, really? This many people in 2 days? Where? Like, oh wow. Like, I'm sorry to hear that, man. Okay, so yeah, the insight from an insider from Iran is saying that they think they will change the regime, and then after that, because of the regime change, we will see a drop in gold prices because it will be less uncertainty in the Middle East region, if I understood you correct. Yeah. Okay, so now let's start talking about the economic calendar. Let's go through it real fast because like it's a light calendar this week. That's why I started with the what's it called, the charts. So today we have nothing. Tomorrow, Tuesday, we have the consumer confidence coming from the U.S. The previous is 84.5. The forecast is 87.6. So it is expected to be improving. If the actual comes in higher, that supports our weekly engulfing candle or bullish engulfing candle that we saw on the DXY. That's number one. Then we move to Wednesday, um, February 25th. We have a President Trump speech. Nothing is expected, but I think he will address Iran situation, and he will talk about the Fed, and he will talk about the economy in general. So this will be an important speech. Not nothing new, to be honest. I don't think he will bring anything new because he keeps repeating on, like he keeps on repeating himself. But we'll see. And then we have the German GDP, which is the German economy growth. The previous is 0.3% growth, and the forecast, that's for Q4, by the way. And the forecast is 0.3% as well. So they're expecting that their growth is going to be steady. If it comes in higher, that's positive for euro. If it comes negative, that's negative for euro, and we might see the follow through in the bearish engulfing that we saw on the euro. We might see it happen. Okay. So then we have the CPI coming from the Eurozone. Now, the previous reading was 1.7, which is below the 2% target that they're working for. Now they're facing another risk, which is deflation, which is lower prices. I explained this several times in the past, like in past live streams. So now I think if this comes a little bit higher, like it's okay. But as long as it's below 2% or at 2%, they're fine. But if it comes in lower, I think they're going to cut rates urgently. I'm talking about the ECB. Okay. Then we have the crude oil inventories come from the US. Last week we saw a huge drawdown in the inventories. I think it's because the US Iran attack, or the US attack on Iran, is approaching, so which could cause some disruptions to the oil market and the oil supply chain. That's why many people, or many, let's say, um, many market participants, or many users or like energy consumers attacked the inventories, and that's why we saw the large drawdown. Not attacked in terms of like a violent attack. No, I mean like they all went at the same time. Uh, Based on my experience, okay, Nadeem is saying based on my experience, when there's a huge global situation, economic numbers won't affect the markets too much. Correct, but that's like they continue to affect the markets until the actual thing happens. Okay, so let's wait and see. So actually, that's what I was basically saying here. Like the crude oil inventories in the US, like saw a huge shortage, which was minus 9 million barrels, like a little bit above 9 million barrels of shortage. That's because they're expecting a disruption in the oil or energy supply chain. So yeah, this is affecting it. Okay, so next we have the initial jobless claims on Thursday. The previous reading was 206, which was a good reading relatively for the jobs market. The forecast is an increase to 216,000 jobless claims. If this comes in higher, that's negative because it means that they need to cut rates in their next meeting to boost the jobs market. Not necessarily in the next meeting, but they need to cut rates in general to boost the jobs market. If it comes in lower, then they're okay and they have time or they have room to keep rates higher for longer without hurting the jobs market. Finally, on Friday, we have the German CPI. Earlier in the week, we have the German GDP, and then at the end of the week, we have German CPI. The previous was 0.1%. We have no forecast number yet. And then we have the PPI coming from the US and the Chicago PMI. Now, the PPI is the early warning for inflation. So it is expected to be lower than the previous reading at 0.3 for the month of January, in comparison to 0.5 in December. So if this comes in lower, then like they're okay. It means that they're making progress in their inflation. If not, if it comes in higher, then it means that they definitely need to keep rates higher for longer to fight this sticky inflation. Okay. Finally, we have the Chicago PMI. The previous was 54. The forecast is a drop to 52.4, but it's still above 50. So we're in the expansion territory. It's not very good. Like it's going to be less good than the previous reading, but it's not bad because it's above 50 and it's in the expansion territory. All right, so that's it for the economic calendar. If you have any questions, I'm gonna stick around for another minute or two. If you have any questions, Nadeem is saying WTI January candle also closed super bullish, correct? And maybe we'll see a super bullish close on like in February, and in a couple like at the end of this month or this week. So let's see. Let's see. Yes. Do you guys have any questions before we call it a day or we call it a session? I'm going to stick around for one more minute. All good? All right, guys. Thank you very much for joining this live stream. I hope it was helpful. I hope I answered all your questions and I clarified as much as I can, or as much as I could. Sorry, language barrier. So take care of yourselves, and I'll see you on the next one. Bye bye.